Welcome to this stock analysis blitz for Admiral Insurance Group. Please remember I'm doing this video for fun and speak to a financial advisor. Admiral are the UK's largest non-life insurer with a market cap of about 10 billion. Looking into their main business segments, they have UK insurance, this international insurance, which it turns out is all car insurance, and this Admiral Money. However, with this pie chart of their pre-tax profit by business segment, we see that although 14% of their revenues are international insurance and 2% Admiral Money, the vast majority of their profit is from actually just UK motor insurance. So this really is a bit disappointing to me because I thought Admiral was supposed to be a big ticket blue chip insurance company with a global presence, but it's a bit sad that all of their profits are coming from UK motor only, and in fact their UK travel and pet and their international insurance are both loss making. So that was a little bit disappointing right off the bat. They also say that they're leading in EVs. They did, however, achieve 14% customer growth in 2024, with their profits doubling. So, despite the initial bad optics of all their money coming from UK car insurance, it is actually a very impressive performance in 2024. And they made about 0.7 billion in 2024, which is a very impressive net income. They explained this as being due to a boosted combined ratio plus prior period releases. Now, the combined ratio is much of how insurance company make money. It's basically all of the losses they've incurred for claims on stuff that they've insured, plus their running expenses, which includes dividends, divided by the earned premium. That's the premium they've cashed in for policies that have expired without them having to pay claims. Prior period releases, that's where in the past they thought they'd have to pay more out in terms of insurance than they actually have had to. And so that gets released and actually goes into their profit and loss as an income. And they also mentioned the Ogden discount rate, which they say added 100 million to their profits. Now, the Ogden discount rate is where you've been in an injury and the insurance company have to pay out for an injury. The compensation is calculated as a lump sum, and it includes in that calculation what that lump sum will be worth in the future. So because interest rates have gone up, it means you kind of need a smaller lump sum at the start. So this has provided a boost to UK insurance companies, and according to Admiral, that's added 100 million to their profits in 2024. They're paying out a 5.8% dividend yield, including 0.9% of special dividends. This, though, actually makes them the lowest paying within my shortlist, other than one other, Beazley. And in 2024, they bought out RSA's home and pet business, which I'm not so sure about. Apparently, in the past, they've never done any inorganic growth. This will be the first time. So why are they having to grow inorganically now? And I noticed that they actually hold 1.2 billion of debt. Most of the other insurance companies in my shortlist don't have any debt. So I really don't like this 1.2 billion of debt. That's actually 10% of their market cap. In their annual report, it was actually quite difficult to find this debt. It goes under as other financial liabilities here. And then 50 pages later, hidden in the bowels of the report in note 6I, we see that they do have about 1.2 billion of debt, and they're actually paying about 76 million a year in interest on that debt. Now, actually, it turns out that a lot of this is because of their Admiral Money business, but they also do seem to be raising bonds where they have to pay 8.5% interest on, and they also have a 300 million credit facility. So I don't really find this debt appealing for a insurance company. However, a lot of it is because of this money business that they're trying to do. Their assets look different to all the other insurance companies in that they have a lot more money markets and they don't really use government bonds as much as most other people do. The majority of their assets are all in pounds sterling. We can see here on my duration diagram that actually they use money markets on the short end and then all of the longer term debt securities going out to above 5 years. But their profile in terms of duration appears to be fairly typical of most of the insurance companies. One of my main investment ideas for the last few years has been that we're going to see a normalization of the UK yield curve, and I think this will suit Admiral fairly well. Looking at their net income history, we see that it jotted up in 2021, and this was actually because there weren't many claims being made because of the government shutting everything down at this time. However, then in 2022, there was massive inflation, and this led to claims inflation. So they're having to pay a lot more to repair people's cars and things than previously thought. I've got here the inflation as the red bars, and then interest rates at different maturities. And then when I superimpose that over the Admiral Group's net income, we indeed see that when inflation was high, that created the massive dent in their net income because of claims inflation. But they seem to be doing quite well now that high interest rates have set in. They've had a real good boost in 2024. I think some of that is going to be related to the generally higher interest rates, as more and more of the debt securities they have in the long end will be yielding high interest, and that will bring in more cash in terms of the investment income ratio. In terms of the combined ratio, I'm not totally sure how much of that is because of the prior period releases, but generally Admiral Group do seem to look like they're going to be doing well in the current interest rate environment. When I look at their share price action, it's kind of boring, actually just reflecting their net income, really. They don't appear particularly cheap, albeit that I've not really gone into any valuation analysis here for this brief video. But I've decided not to spend any more time on Admiral Group. The reason being that although they appear that they'll probably do okay, they've got one of the lowest dividend yields of the insurers in my shortlist. And I'm just fairly put off by the fact that they appear kind of inefficient because a lot of their energy is into international insurance and all kinds of different kinds of insurance, plus this stumpy head of Admiral Money. It all looks a bit untidy given the fact that the vast majority of their profit comes from UK motor insurance specifically. So that kind of puts me off them. Also, the fact that they have debt when most of the other insurance companies don't. Having said that, I'm sure that they're going to do very well. I think in the longer term as well, they'll definitely be a candidate for a company that you could invest in that will do well out of AI. Actually, while just doing this video, I just noticed this triangle technical pattern here. Maybe I'll put them in my watch list and come into them in the future if I see something interesting. If I see something interesting develop here, with the idea that they could be a company that's going to benefit from AI in the future. But for now, the energy seems to be in the wrong places. And in the next few videos, I'll be continuing to examine these other insurance companies. For those of you following my insurance stock series, in my last video, I eliminated Aviva, Helios Underwriting, and Personal Group. Take a look at that video to see why. With Admiral Group, I'm actually going to add them to my watch list. They're kind of big and safe but low dividend, but there's an interesting long-term technical pattern. So I'm going to stick them on my watch list as a potential play on future AI gains. It's one of them boring companies, but which in the long term, in the future, could actually gain quite well from using AI. So that completes my video, and speak to you at the next one. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.